Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is December 7, 2022. I'm going to cover the charts and graphs dashboard of the stock market, bond market, other assets, kind of where we are, where things have been going as of this past week, or as of this past Friday. And so we'll jump right into the dashboard. In the dashboard, what I illustrate is I illustrate 7 different ETFs, exchange traded funds, and 6 of them are equities, and the last one is bonds. And I give it a green dot or a red dot. The green dot shows that these are above their moving average. On the columns to the right, you'll see a green dot or red dot, and those represent, going from left to right, the 20-day, 50-day, 100, and 200-day moving averages. So as you can see, there are 25 green dots out of a total of 28 possible. So this shows strength for the market, and that it has risen from its lows, certainly at the end of September. And so I'll cover where these stand. In the center part of the dashboard are percentages, and these represent where these averages are year to date. The last column is year to date. Everything is down. What is down the least is the Dow Industrial Average, down only 5%. The developed countries, developed markets, represented by EFA, are down 13.9%. The S&P 500 down 14%. IWM, the Russell 2000 Small Cap Index, down 15%. EEM, the Emerging Market ETF, is down 19%. NASDAQ 100 down 26%. And TLT, the long-term government bond down ETF, is down 27%. That one was actually down as much as 35%, 36%. So it has done some recovery, but still is below its 200-day, the last 3 are still below their 200-day moving average. But everything else is positive. When we take the S&P 500 and break it apart into the component parts of the sectors that make up the S&P 500, there are 11 sectors, and you can see where they are. In this, again, the dots to the right show the above or below those moving averages, 20, 50, 100, and 200 day. And the numbers in the center represent the percentage change for the week, the month, the quarter, and the fourth column, the year to date. The strongest ETF sector by far is energy, which was up 62% for the year. Consumer staples up 0.1%, and everything else was negative. Going all the way down to the bottom, the last 3, retail, telecommunication, and consumer discretionary, down 25, 28, and 29%. Okay, now I'm going to get into charts, cover a lot of stocks and indexes. This is the S&P 500 chart for the last 12 months. It's a weekly chart, so one move in the line equals 1 week. Cutting through the data is the 20-period moving average. So you can see if the index is above its 20-period moving average or below. At the end of the chart, you can see the last couple of months, I indicated with a black arrow that the market in general, and the S&P in this case, has gone up. So the short-term trend, we don't know how long it's going to last, but the short-term trend is positive. And we saw that through the dashboard. A lot of the sectors and indexes were all positive and above their moving averages. But because it does go up and down, we can't say it's going to keep going up every week. But so far through Friday, it's been positive since the beginning of October. It's helpful to see things from a macro perspective, because in investing, it's no matter what method a person uses, it's important to not knee-jerk with short-term moves. If you do, when you see from this, if when it goes up, you get it's up enough, now I'm going to get in, and then it's down enough, I'm going to get out, it usually doesn't work well for you. So we take kind of an intermediate term approach, but we encourage people to look a little bit longer term and to let whatever method they're using work itself out. Okay, so now what I do is a relative strength chart. This takes the stocks inside of the S&P that are growth stocks, so that'd be the growth component of the S&P, and those stocks that are value stocks, and puts them together in a ratio. And the growth I put as the numerator and the value as the denominator. What that means is, from a relativity standpoint, if this is moving up, it favors growth. If it is moving down, it favors value. So for the entire last year, well, not for the entire year, but for most of the year, it has been going down and is now down and below its 20-period moving average. So what that says is that value stocks or value indexes are more in favor than those that are growth stocks or growth indexes. When I put a relative strength chart on the small cap index, the IWM, the Russell 2000 small cap exchange traded fund, relative to SPY for the S&P 500, I create a 24-month chart to give you a longer perspective. And if this goes up, it favors small cap. If it goes down, it favors large cap, namely S&P 500. So you can see I put a line across the bottom. I'm trying to say, what is the pattern here? The pattern was favoring large cap over small cap. Since that time, it, with the black arrow, is now slightly favoring small cap over large cap, starting to go back up. But more than anything, for the last, 9 months, 10 months, it's mostly just been up and down, not really having a clear direction of large cap over small cap. A 30-month chart showing this is not relative or relative strength, this is just pure absolute chart with the long-term government bond. The ETF is TLT, and you can see over this 30-month period, there have been 2 long periods where the bond prices have gone down, and then I put a circle at the bottom because, as you saw from the previous data, that the bonds, government bonds in particular, have been moving up and are now slightly above the 20-period moving average. So is this a trend, a short-term trend, a long-term trend? I would say it's probably a short-term trend, but it is a trend going in an upward direction. This is an 18-month chart of the dollar using the ETF UUP, and you can see the dollar had a lot of strength going up for most of that 18-month period, and then it has declined. And so kind of moving in it, this generally happens, moving in a counter direction to equities. So as equities went up, then the dollar went down and vice versa. Okay, now I'm going to cover gold. This is a 12-month chart, and you can see, not unlike bonds, you can see that gold has been moving up in the last month or so, and moving up nicely, and maybe, I mean, it's showing some strength. So this could be a trend. At least we see a short-term trend here. And then I do the same for silver. Silver moves more dynamically than gold, and when it's going up or down, it's usually going up faster or falling faster than gold is. So the ETF SOV, you can see where it's been in the past couple of months, definitely in an upward trajectory. When I put SOV relative to gold, SOV numerator, GLD denominator, this is what the chart looks like. SOV, meaning that if this moves up, it favors silver. If it moves down, it favors gold. So relative to each other, the silver is stronger than gold at this point. Then I'm doing one on Bitcoin, so you can see what's going on with Bitcoin. BITO is the ETF that is commonly used for Bitcoin, and I put a 13-month chart. With very little exceptions, the general trend is down. Toward the bottom, it's kind of flat, but it's still not showing any strength at this point. The volatility index showing that, is how volatile is the market. It's usually meaning how volatile in a negative way is the market. If it goes up, it shows increased volatility, and that's usually not good for equities. And if it's falling, that favors equities. So it shows that over this entire period of time, it's gone up and down a lot. So when you look from about the beginning of October, when equities started to increase in value, you can see what happened to the volatility index. It has gone down, pretty consistently. I put the black line in there to show the artificial place where, when it is above that, it tends to be negative for the market, particularly if it's rising. And then conversely, if it's below that, and especially if it's falling, that's favorable for investing in equities. Asbury Research, their chart shows there are 5 of their metrics which are positive and 1 that is negative. The cross-asset relative performance shows that it compares various ETFs, asset classes, or types of equities, one to another. So I'll go through these. SPY compared to AGG. AGG is a surrogate for bonds. Stocks are more favorable than bonds. High beta versus low beta. High beta is more favorable than low beta or low volatility stocks. I'm going to skip the next 4 and go to developed markets or emerging markets compared to the U.S., compared to the S&P. In all of these cases, the developed markets and the emerging markets are showing more strength than the U.S. market is. And this looks at the period of time. The 3 columns to the right are the last week, the last month, and the last quarter. So fairly a short-term measurement. And then on bonds, government or corporate bonds are stronger in all 3 time periods than government bonds. And sometimes this doesn't mean they're going up, it means they're losing less. High yield versus corporate. Corporate is performing better than the high yield, and the long term versus the short term. The long term is showing more strength than the short term, and we saw that in the chart on TLT. That would be the long term bond, and showing more strength and outperforming for each of those 3 time periods. When we look at the U.S. versus the world, what's interesting, continues to be interesting, is that from having enough strength to get a green box, Can you find any that have the U.S. in there? I don't see any. So there's a lot of countries that are stronger than the U.S. And so I just thought I would show you that. Chile, New Zealand, Australia, Hong Kong, Italy, Switzerland, Malaysia, France, Singapore, Taiwan, United Kingdom, the Eurozone, China, Thailand, and the emerging market sector, all stronger than the U.S. for the last week, the last month, and the last quarter. I thought I would take, when I say that these countries are stronger than the U.S., I thought I would put that, I just took one of them. I took France, for example, and just put it on a relative strength chart, U.S. being the numerator, France being the denominator. So when it goes up, it favors the U.S. When it goes down, it favors France. Now remember, in these periods of time that Asbury did this, it's just the last week and just the last month and the last quarter. So it is a very short-term period. But you can see during that 3-month period, the direction that down, and that favors on a relative strength basis, favors France over the U.S. However, when you look over this entire year, you would say it's a mixed bag. You know, there are periods of time where the U.S. market was stronger, periods of time where France was stronger, not really having a clear path other than the last quarter. Gold and silver, as I said, showed you on the previous charts, both are in an upward trajectory and have come off of some lows, and we'll see where that goes. This is as of Friday. The gold is $18.05 per ounce. That's the spot price, so the markup is on top of that. And that's a 3% increase from 2 weeks ago, because the last show I did was 2 weeks ago, November 18th. And then silver is up 10.8%. And again, you saw that, the strength that silver has. So when it starts to surge, it really surges. Conversely, when it goes down more sharply than gold does. But silver on a spot price is up to $23.21. I think we saw it down in the 18s not too long ago. Wanted to show you this. My daughter, Celeste, is married to a guy named Zach, and he is of Russian descent, and he's from Canada, and they are expecting their first baby. And so he's an amazing cook. I think from his Russian family, he's learned an amazing skill of cooking. And so he made this incredible turkey for Thanksgiving. They are at the point with their baby that they are able to know the gender of the baby, but they haven't told anybody. So what they decided to do would be to create a surprise for us at Thanksgiving. So they came up with this idea of putting something in the turkey that would be a clue as to the gender of the baby. And so he's carving away at the turkey, and then he stops. We don't know what the clue is. We don't know where the clue is. So he stops, reaches inside the turkey, and pulls out this that Celeste is holding. And that's what it looks like. So we now know the gender of this baby to come in the month of May. Thank you for watching. If you have questions or comments, leave them in the comment section below, and I will try to answer them. Thanks for watching.